friends, this is Martin from Secret Channel for learning about trading and investing. Welcome to the markets tomorrow, the daily technical analysis, where we look at what happened in the market exactly today and then try to plan for a better trade for tomorrow. So the index weekends further some more, and tomorrow we have expiry. Let's analyze and see what happened. Before that, if you're not subscribed, subscribe and share to your friends so that everyone benefits from it. Thank you. So as usual, we will be doing the analysis for November 11th, Thursday, tomorrow's expiry day, and we will look at all of these parameters that you see on the left in the charts, and in addition we will have data analysis that will do all of what you see on the right side, and we will also have an actions and then wrap up. So without wasting time, let's see the price action what happened today. This is what you see. You have a green candle, but you lost 24 points. We have here also you have a gap down, and to recover from that it will close, and here also Bank Nifty right side you have a gap down, but it could stay flat there and bearish and not close. So today 27 points lost, and on the Nifty, and it is after a gap down. Well, it recovered from that, but could not sustain about previous close. Bank Nifty 345 points down and close red, and it also gap down, but also stayed more. So in data wise, you see Bank Nifty and Nifty both gap down, but one managed to move, the other one failed to do that, and the first one also could not move and close at a higher point. So basically it has fallen off the Bollinger Band median to the moving average, and both of them could not close above that since last 2 days. So Bollinger Bands, if you see, you can, before that you can see the price action here. This is what happened: gap down on Nifty and then attempted to move up, and then it did move up and it got sustained. So it recovered pretty well. It is a V-shaped move if you look at that, right? Like I said, Bank Nifty, it gapped down, consolidated, but that V-shape never happened here. It lost 50 points, right? Almost 1%. And Bollinger Bands, you can see that there is a contraction that is happening slowly, and also there is a upper Bollinger Band with small sideways, which is indication there is going to be several weeks or days of consolidation that is there in Nifty and Bank Nifty, but the distance is still very high, so this market is going to be very volatile. That is what the Bollinger Band is teaching us. Support resistance, if you see that it is at a support, even today it's at 18,000 support, and then after that you have the resistance 350 range, which is the Fibonacci extension. After that you have all-time high 18,600, 650. Now if that is if you support below, if it loses the current support, then it is 7850 to the previous swing low, and then again if it loses, then it's 17,600, which is also previous swing low, and below that you have 7350, 250, and then 70%. Right side Bank Nifty, you have either slipped off the resistance of 39,500, and then it has taken the support of 39,000, which is Fibonacci 23 retracement, and if that is broken, then you have 38,400, which is also a previous swing low, and if that is broken, you have 38,000 levels, and if that is broken, you have 37,800 levels on the downside. So upside, you see the previous supports would now act as a resistance of 39,500, and above that you have 40,000, above that you have 41,000, and above that you have 40,000. That's a Bank Nifty support and resistances. Bollinger Bands we have already seen, and momentum divergence, we know that there is a momentum divergence on a weekly basis, which is price is falling and price is moving up, and then momentum is moving down. It's on the weekly, and it is confirmed and it is in action. That's why Nifty bounced. Now short-term daily candles, if you see top Nifty and bottom Bank Nifty, you can see that it's in the sideways momentum. It has lost the bullishness, right? Trend indications ADX, if you see that DMI negative, so it is trend is short-term bearish, and strength of the trend also, the green one is also falling down. Trend also on the right side Bank Nifty is also moving down. So there is on the short-term bearishness is there on the trend, and the strength of the trend also is weak, but on the weekly candle both momentum and trend are bullish on both the indices. And the trend weekly candle, it is a rising strength in the Bank Nifty alone. So medium term wise Bank Nifty is more bullish than Nifty. Short term both are bearish on trend and momentum. So volatility VIX, if you see, yesterday it has fallen down, now it has fallen up 2%, right? 16.3 settled, and then implied volatility is 15.36, and IBP is flat, saying 33 levels after it had initially hit a 42 kind of levels earlier. So That's about volatility in the India VIX. And opponent data, if you see, we see a bearish strategy for before the expiry tomorrow, November 11th, and you can see that it's the highest call writing that is in both the charts, right? What is the call writing? 18,200 Nifty, and no, it's 41,000 on the Bank Nifty. So the Nifty, you see, the support is seen as 7,900, and then after that you have the overput writing is seen at 7,800, and the resistance you can see that 18,200 and 18,100, and then put call ratio is 0.73 is not produced, and short bundle is what I want. Futures Bank Nifty 39,000 and 37,000 is quite far away. That is where the highest put writing is, and 41,000 and 13,500 is where the actual resistance. So most likely it may be a fight between 17,800 and 18,200. Now that range is where the price action may be happening if there are no big moves that is happening. So yes, so Bank Nifty also similarly 39,000 and 40,000 maybe. So no, maybe the price action may be happening. So normally various charts, and put call ratio is also bearish, but the ranges matches with what we have seen in the charts. So if you read the total, you will get levels where you have to make the entries and exits, right? Apart from the previous day's close and previous day's low and previous day's highs, right? So those are the levels that you watch. So sectorial performance, if you see, no, just to brief for 5T when down 90 points, but short term is still lost. Metal goes down 1.75%, short term is lost. Auto is bullish 0.5%, it closed up. Could speak cautiously, right? Pharma down, momentum also down. FMCG down 50 points. Reality is up 1.7%. No, momentum is also good. So reality and auto momentum is good. Price action is okay. So you can cautiously go for the stock picks. Institutional participation is worrying again today, 10th November. We are seeing that the Fyers again sold for the 5th day consecutive after a big sell-off in October, 25,000 crores. And domestic institutions again bought a little bit, right? And they have been buying every day since last 5 days. But yeah, institutional participation from the foreign institutions are buying. Dollar is attempting to go back to the resistance area once again. Dollar index, you can see that it is strengthened today. So dollar is showing strength in the USD and our currency pair also. It had slipped to the 74 below levels after hitting the 75.5 kind of levels earlier few weeks back, and now it is trying to attempting to go back and then take it and close two green white rich candles, and momentum also has caught up into the sideways for the bear zones. So you can expect some further some more up move, probably not beyond the 75, but some up move can be seen, and it all depends on whether the probably the dollar index is further ascending to what level is what we'll have to look at on the charts. Now the crude oil has pulled off a little bit today, but it's at all-time just multi-year highs kind of level, so it's not good for our economy. But there is some kind of resistance that is in the momentum also on the crude oil. Right? Gold is breaking out in the channel, which is a cup and handle. And it is overall bullish, but it is a good resistance at 1825. Both are also a good resistance at 1876. But it's in a very small. The momentum of the gold has caught up. So after a long time, you have a momentum that is in the bull zones for the gold. So this time it may break out further. Is what looks like. It's bullish, however. Now the US markets, if you see, you can see that there is some bearishness that is there. Seen 100 points down Dow Jones and 100 points down on Nasdaq and 100 points and slight few points down on the S&P 500. UK markets also some red is seen in DAC and CAC. So we'll have to check that pre-market tomorrow if this continues. If this continues, then it could reflect in the STX also, and that could reflect now market also, right? So let's move ahead. And the next numbers we have Muthoot Finance, and then we have HDFC. Both are breaking out. So it's a box pattern, rectangular pattern, whatever we call it. Right? It has formed once and broken out, formed the other layer, broken out. So this is a very trending move, and then it's maybe good for a. It's on a weekly chart. The chart shows on a weekly. Entry has to be on a daily. And so if weekly it is there, it's not a. It may be a sustaining good positional trade probably, right? And gold finance companies are all trending, right? And you can see the momentum is good, volume is good, trend is good. Here it's a cup pattern. It is broken out from the previous major resistance, and it is sustaining above that in spite of the downfall. And when it is good, volume is equivalent, and this is a weekly chart. Trend is also good, so that is also a good pick. Wrap up. Just like yesterday, mild bearish. Today also the short term. So tomorrow I'm bearish. Slight mild bearish, not heavily bearish. So recent charts are showing that there is a momentum slip and a trend slip, and it has to catch up again before I can be bearish on the short term. And chart also weakness is that it cannot close. It could not close previous 2 days consecutively without previous candles close, previous days close basically. 20 moving is a big resistance, and even after 18K is crossed, it could not climb above the 20 moving, is indicating the weakness in the both indices. Institutional participation being very bad is worrying, right? That is one reason DAS has been buying it, but how long would they buy, right? They have been buying it. They have been so institutions has not been buying at all, since 2021 financial year beginning, right? It was only the retailers and the VIs that were buying it. That's a concern. Weekly bullish momentum candle is still there on Nifty, so it is already confirmed and it is in play. So it could still work out to take the market to the previous day high at least. So that chance is always there, but overall, in the short term, it's bearishness, which is mild because of the previous reasons that I've given. Last two sections are all about volatility, and which is used for option traders. So volatility is very choppy. That V-shaped move happened today also in Nifty and Nifty also, right? So it just formed a range of 2015, and then it is hovering around that. So this will be the nature as long as it is in this range. So always use calendar splits to diversify its benefits and fly strategies, and never go for naked selling or naked buying. Instead use calendars. Instead use vertical splits like bull call, bear call, and all that, right? And big profit bookings and sudden reverses, all this very common. We can screw up the plans with the data traders. So it's always advisable to go for strategies like that's mentioned earlier. So that's all about the wrap up. So hope it helps you to frame your own view on the market and your own trade plan. So if that help you, consider hitting the like button and share to your friends and colleagues so that all benefit. Thank you so much for watching, and happy trading and happy learning.